Hey everyone, Lululemon stock is down 42% off its high, and in this video I'm going to make my case for why I think Lululemon stock is an excellent undervalued stock you can buy today and hold for the very long term. So I'll look at its revenue, I'll look at its latest quarterly performance and the latest annual performance, project forward for 2024 what the company is expecting and what I'm expecting from Lululemon, look at its longer term prospects, and weigh that all against its valuation to make my case for why I think this makes an excellent investment at current valuations. So let's start with the latest results.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, in the latest quarter, Lululemon net revenue increased by 16% to 3.2 billion. One of the more troubling aspects was the 9% growth in the Americas. This is the first time investors saw less than double-digit growth from Lululemon in an otherwise normal operating environment. The company has experienced a slowdown in revenue growth, and that could explain why the valuation is down so much off its high. Typically, Lululemon stock is an excellent performer. To find the stock down this much off its high is a rare occurrence. It's currently down, I mentioned, 42% off its high, and that's the second such 40% drawdown since early 2022, when the company experienced a similar drawdown from its highs in 2021. Now, Lululemon still managed to increase its gross profit margin in the latest quarter to 59.4%. That's an excellent gross profit margin for any business, let alone a apparel retailer. So they've been able to increase their gross profit margins. They are one of the best in class in this category. They have better profit margins than even Nike does. So that's what has attracted investors to Lululemon stock in the past. And because of their recent slowdown, I think it's opening up an opportunity to get into Lululemon stock at reasonable valuations. The slowdown, unfortunately, is expected to continue, and I'll talk a little bit more about that later in the video. For the full year in 2023, in their fiscal 2023, net revenue increased by 19% to 9.6 billion. Gross profit margin increased by 300 basis points to 58.3%, and operating profit margin increased to 22.2%. That was up by 580 basis points. So in terms of executing the business, growing revenue while growing margins, Lululemon did a phenomenal job in fiscal year 2023. Macroeconomically, the conditions for retailers, apparel retailers, worsened in 2023. You've seen, and I've reported on, the poor results from Nike and others. Most recently, Under Armour reported a disaster quarter, and that's weighing down on Lululemon, the broader industry, right? The broader consumer spending environment. Two major factors weighing down Lululemon and other apparel retailers. Number one, inflation is eating into consumer budgets. They have less disposable income. People make a certain amount of money. They have to pay for essentials like rent, fuel, utilities, car payments. These are all things they can't avoid. And the cost of these things has gone up by so much that it's leaving less spending for disposable items like maybe a pair of Lululemon pants. Secondly, consumers have desired to spend more money away from home. Things like travel, restaurants, theme parks. And that leaves even less of a budget available for apparel. So those two factors are weighing on Lululemon. Fortunately, one of those factors, the away from home trend, looks to be at the end. After this summer, I wouldn't be surprised if that trend reverses. If in the back half of this year, people start to spend more time and money at home because the cost of everything away from home has increased by so much, Visits to a theme park, going to a restaurant, they've gotten so much more expensive than they were before the outbreak, before governments worldwide launched a massive stimulus campaign. And so people are going to start to look at their budgets and realize they can't continue to pay this much money for these experiences, and they'll need to pull back. Not because they want to, maybe also because they want to, but more so because they need to. There's going to be less money available in their budgets for those spendings away from home. And that still might be not a great sign for Lululemon, because disposable income is where they benefit from, but also it will benefit from the fact that the portion of spending between goods and services will normalize, right? That there's been unprecedented changes in that dynamic between goods and services. I think starting in second half of 2024, that will normalize. People will spend a normal percentage of money and time on goods and services and not be out of balance like it's been for the last 4 years. So the company's management team feels like the shares are undervalued. They repurchased 1.5 million shares for $554 million. That's a sign that they feel the stock is undervalued. I agree with management. I feel Lululemon stock is undervalued. And the company's still in growth mode. They opened 56 net new company-operated stores in the quarter, ending with 711. And given that they're an international business, they've got a long runway for growth here in terms of how many new stores they can open. They can reach well within the 1,500 to 2,500 range, if not more, in terms of the number of stores open. Now, the balance sheet is in excellent condition, $2.2 billion in cash and relatively no debt, and inventories decreased by 9% to $1.3 billion. That's what you want to see from a management team that's anticipating a slowdown in growth. You want to see them match that by decreasing inventory, because if growth is going to slow down, you don't want to have more inventory. You want to have a moderately decreasing inventory balance. And for the first quarter of 2024, they're expecting 9 to 10% growth, which at the midpoint would be less than double digits overall company growth. And then for the full year, they expect things to get better in the back half of fiscal year 2024, expecting 11.5% growth for the year. So their next quarter is going to be the worst, and then they expect improvement throughout the year. Still, that single-digit revenue growth expectation and the slower than expected revenue growth for Lululemon has spooked investors, and that's why the stock price is down so much, 42% off the high. But the business is excellent. 22.95% operating profit margin in the trailing 12-month period, nearly the best in class in this category, definitely better than Nike in this category, and Lululemon is trading at a forward price to earnings of 18.65, which is the absolute cheapest you've been able to buy this stock going all the way back to July of 2021. You've rarely had a chance to buy this stock at this valuation. The near-term headwinds have allowed this for investors to get this stock at a relatively cheap valuation. So I'm going to update my Lululemon recommendation here and suggest that it's a buy for long-term investors that want to capitalize on this excellent growth stock. Thank you for watching this video. I truly appreciate it. I know there's a lot you could be doing with your time and a lot of other videos you could be watching. So I truly appreciate that you chose to watch this one. If you want to see more videos just like this, hit the subscribe or the like button. They'll both help me make more videos just like this one. Thank you again.